Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Pargamatic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I at Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's a disclaimer.
Excellent.
And I'm going to share my screen. While I'm doing that, a quick note to anyone joining us for the first time. Will and I, we do these shows in the morning so we could answer any questions you may have about the Market Chameleon tools, the data, analytics. If you have a question, you could type that question into the live chat on YouTube. Will's watching it. He'll read them back to me. If you like to come on a show and ask your question live, we also provide a link to Zoom. Click on that live chat, click on that link. It takes you over to Zoom, log into Zoom. Then there's a little button there, raise your hand, click on that. You could ask your question live. While we're waiting for more people to join us and to give you a couple minutes to put your questions in, we'll start out taking a look at the pre-market report, see if we could get some insights on what's going on in pre-market hours, and then we'll move on to the questions.
Perfect.
Okay. So pre-market report, these are stocks trading in the pre-market hours. I'm going to scroll down here and we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. We got 23 stocks that made our percentage gainers list so far, 37 on our decliners list. So these are stocks that are trading in pre-market hours and they have to meet certain price, volume, and liquidity thresholds to make our list. But from this perspective right now, looks like there's slightly more stocks on our decliners list than on the gainers list. So that's showing some bearish sentiment in the morning. Let's climb up here, take a look at it from a different angle. And I'm going to scroll up here. We have this calendar view, which goes back days. We're on August 30th today. And this shows us a summary of what's going on from a high level in the pre-market hours. And here we see that there are 354 stocks that are trading higher than the previous day's close, 268 stocks trading lower. As far as volume of shares, we got 126 million shares trading on up volume versus 97.1 million trading on down volume. And if we convert those shares to dollar value, multiplying the dollar paid per share, we got $2.1 billion worth of stock trading on up volume versus 1.1 billion on down volume. So this gives us a little bit of a contrary indicator from what we were seeing down here. This is showing us that in the pre-market hours so far, on a high level, there's more bullish sentiment in pre-market trading. So let's come down and take a look at it from another perspective. We're going to come down here. And when we look at this list, we do see there are small cap stocks in here, ETFs, leverage products, closed-end funds, pretty much any security listed on a major U.S. exchange. If it's trading in pre-market hours and meets our thresholds, it can make this list. So to narrow down this list to a smaller group of stocks, we could use the filters above. You can use your watch list if you create a watch list. I'm going to use this in ETF filter. When we drop it down, we get a list of ETFs to choose from. We're going to select this one, SPY, which is the S&P 500 ETF. And by selecting that, the list below will get filtered by stocks that are holdings in SPY. And here we see a little bit of a different perspective. We got one stock made our percentage gainers list, 4 on the decliners. So that's slightly more bearish than bullish. So kind of a mixed bag here of what's going on in the pre-market. I would say so far, it's neither here or there. Not overwhelmingly bullish or bearish. We gave it a couple minutes, Will. So if we do have questions, I'll take them now.
Yeah, we did have a question from Igor. He was asking, he'd read something recently. Question: recently, BlackRock have quietly invested $500 million into Bitcoin miners. Can we see such large purchases when they take place? And he's asking the symbols, I guess, of some Bitcoin miners: BITF and CLSK.
BITF.
Yeah.
I don't. This one here. So I don't know that much about that. And I'd have to read it if they made a direct purchase into this particular security. I'm not familiar with it. I'd have to read more how they made that investment. Did they do it in derivatives? Did they do it in this particular BITF? I'm not sure, but I would say I'd have to go really read what you were referencing to see if I could map it out. Okay, but without knowing all the details, I don't think I could answer that question because I'm just not familiar with it.
There you go.
Yeah. Is it, did they do a derivatives trade? Did they do like a straight purchase of this? Is this an ETF, by the way? What is this?
I think this is a stock that sets up Bitcoin farms.
Okay. Yeah. I don't know if they did a direct purchase in this stock. I'm not sure, so it'd be hard. I can't answer that question right now. I'd need to go in there and read it and really assemble that information myself.
There's no way to look back at the history of one stock and see if there's been an outsized volume in the stock. Correct.
I mean, you could just go kind of over here and you might see. And again, did they do it in the derivatives? Did they do it in the equities? And I'd have to go really map out where it is so we could kind of narrow down the data. Otherwise, we're going to just sit here and I'm going to have to read the article and try to map out what may have happened. And I don't want to, spend 20 minutes reading here while people wait.
No, that was from them. But
yeah, I guess the answer is without more details, I wouldn't know how to narrow down the data. And again, I don't even know if it's this stock, right? If it's this particular stock.
Yeah, we don't know if it's either stock. Well, he hasn't said it. That we haven't seen the article.
Yeah.
All he did is ask a question and list the symbols.
Yeah. So maybe email the article to me. I'll take a read. I'll take a read, and if I have more information, I'll. And if we could find interesting data around it, I'll take a look.
Also, we had a question from Mike. He was asking, what does 6% of the float mean? How's it? I mean, I guess, Mike, how's that mentioned? 6% of the stock float? I'm not exactly sure.
The question? Yeah, I mean, look, in general, when you guys are, if you guys are reading articles or like other research out there that's not on our website, it would be hard for me to comment on it or tell you exactly what it means because we're not generating that content and I don't see it, right? I don't see that content. We're not the producer of it or author. And I get sometimes because these questions aren't directly related to our website. It's something you might be reading about. And I appreciate the questions. And a lot of times they're interesting. But there are a lot of websites out there and authors and, and some are, do good research, but without, I'd have to myself sit there, read these third-party articles and figure out what they're talking about, and maybe I have some questions about it too, because we're not the creators or generators, and they might be using certain, information and data that's specific to them. So I can't always answer, those types of questions.
Oh, I see. I was Mike. I missed. Igor had said it was 6. They had mentioned, and Igor, you're saying 6% of the float. We don't know what float. Is it in one of those stocks? Is it both those stocks?
Yeah.
It would be great, Igor, now that you've mentioned it and piqued everyone's interest. Wherever you're reading the information, why don't you send it over to support at MarketChameleon.com. We could take a look at it and maybe discuss it tomorrow, the next day.
Yeah.
If we can take a look at it and try to understand it.
And again, you're right. This may not be directly related to any of our analysis or analytics, but I think in general, it's good to understand the market mechanics and the dynamics and the, how the plumbing works, the wiring of the market. So I don't mind those questions, but I do need to kind of see what the information is. And if I understand it, I might not understand that information either. So I don't know what this investment was or what the article says. And sometimes you may see analytics on other websites or I read the Wall Street Journal, I read Bloomberg, and a lot of times they have an analysis based on data that's, either unique to them, or they'll go and, get an analyst or research from a big bank like Merrill, Citigroup, and use their internal data. So these are things that I'm just reading, but I can't replicate either. So I'd have to really see if the article, the information, and even if I have any kind of insights.
Yeah, Rob actually chimed in. He's like, there's unusual option volume. He's talking to the people asking, right?
Yeah.
And you can look there, and if you want to search, you can search BITF and it does pop up. But again, Dimitri and I, neither of us are going to know anything. It's just, it gives, it'd be better if we saw the article. There is some sort of event on September 14th. So that is a good idea, Rob. If you want to find more information on some unusual stock volume, you can go in, you can search for the symbol, and it did appear. So
right. We do see, there's a analyst investor day event coming up. Maybe in front of that, I don't know what they'll say there, and I don't know that much about this stock either. This is the first time I've actually just brought up that symbol myself, but I guess without having that information, I really can't comment on it.
We are getting a question about our earnings coming out tonight from A. Morgan, who's a newer chameleon. He's asking, or she's asking, OKTA has earnings tonight, and then they make the comment, losses each earnings or support despite crushing it. Is there anything you see on the I guess the earnings front with the options? Is what they're asking.
The question though? Well,
OKTA. That has earnings tonight.
Okay.
They're asking if the chameleon showing anything. They're saying, they make the point that I guess the company crushes the earnings report each time, but the stock falls after earnings is what they've seen.
Okay. So let me just take a look at. Let me just try to bring up the data that they're seeing. So over here, I guess here are the earnings estimates. Here are the actuals, right? Here is the difference. So a surprise would be, if the estimates were below the actual, or the actual were higher than the estimates, then this would be a plus. That's the difference, right? So we see lots of pluses here, right? Almost, each time. And then what the observation was, well, why? And this is on the revenue too. Okay, this is a revenue too. So why does the stock, fall? Like here's on August 31st, right? The company beat this estimated value by 20 cents. They beat on revenue by 21 million, but the stock dropped 33.7%. And we've seen other times where, there are times it went up, there are times that it went down, So here's another one, May 31st, there was an estimate of 13 cents, actual is 22 cents. It beat here and beat here. So when we look at the earnings, right? When we look at a company's earnings, there are a couple things to really understand, and I think that and this is one of the hardest, things for like beginners or people who start out trading. They focus on this earnings, and the assumption is, well, if they're beating earnings, the stock goes up. If they're missing, the stock goes down. This is always the assumption, and that's not the case. If you went across the board, right? If you looked at many different stocks, you're going to see this same scenario play out. This is not unique to this stock. And why is that happening? Remember that these estimates are being derived by consolidating certain analysts that follow this stock. It could be a handful of analysts. It could be 5, 10, 15, whatever. It could be 2, right? And they take the average. But these analysts, okay, that is just their opinion. That's not the market's consensus. That's not where the price of the stock is determined. That is just someone's opinion. Okay, it's someone's opinion that they ran an analysis and they're like, here's a number. That's my opinion. Okay, it's just packaged and sold out there. How good that analyst is, I don't know, because everybody who's trading, in a bank and in a hedge fund, they have their own analysis, right? They have their own estimates and they have their own models to evaluate this company, which could be nothing even to do with this earnings per share. There could be other metrics that they're following. So number one, this earnings per share and even the revenue might not even be the driving factor behind the stock's valuation. It could be other things that traders or investors are following, where they could be looking at how's the progress with new development of new products. How many subscribers are you getting if it's a subscription based? What's your churn rate? They have all these different metrics to look at outside of earnings per share. Okay, if you're following earnings per share and beat, right, this is just one piece of data which probably has very, across the board, it probably has a smaller weighting than most people think. Okay, a lot of it also has to do with forward-looking remarks or estimates, because a lot of these companies have conference calls. They're answering analysts and investors' questions. So there's a lot of stuff going on in an earnings that is material outside this earnings per share. Okay, and even the revenue per share, it could be, and it's important to understand that. You could see that we even would barely even like highlight these kinds of things. But if you look at it here, let's just take a different one. Here, maybe Goldman Sachs. So, you know, here's a beat, the stock went down, you know, here's a beat, stock went down, you know, you're going to find here's a miss, stock went up. You know, you're going to find this. I could put up, you know, many different symbols. Here's Meta. Here's a miss, stock went up 23%, right? Here's a beat, stock went down 33. Here's a beat, 59 cents, stock went down. So think of it like this, that these analysts' earnings per share, it's an opinion of between 1, maybe 20 analysts, right? But the stock has probably, you know, tens of thousands of people looking at it with their own opinion pricing into that stock, right? They have their own opinion, their own estimate, their own unique outlook, and they're the ones driving the stock price, you know, not the analysts. So when you're looking at these analysts, you know, opinions and earnings per share, whatever, you got to take it with a grain of salt. Well, I don't even know. A lot of times you don't even know how they came up with this number. Like, you know, so how did you come up with this number? You know, and if you ever seen an analyst make estimates, they're basically just saying, oh, well, here's the trend, and I think that's the next number, right? It's like sometimes they just do a very simple rudimentary, oh, well, you know, here's earnings per share. They're growing at 6% per year. I'll just give it another 6%. There you go. So, you know, even that alone, how did they come up with the number? I think is more important than the number itself. You know, like, why do you think they're going to grow, you know, this much? Or, you know, what are you actually tracking? And if all you're doing is looking at if you're opening up the financial statements, right? If you're opening up the financial statements and you just say like this, let's go to a financial statement, right? Here's an income statement, right? Here, I'll go to the quarterly earnings per share for Meta, all right? So here we go. Earnings, you know, here's net income, all right? Net income, let's do year-over-year change. All right, so let's say I do a year-over-year change, and, you know, I get these here. That's interest, operating income, 12%, minus 15, you know. If I just take the median of it and that's how I projected, I didn't do that much work. You know, it's not like I know that much inside it. All I did was just make a projection by looking at past numbers. Or you take their guidance, right? A lot of times these companies will guide, this is my next earnings per share. The analyst will take it, maybe tweak his own little, you know, give it a, you know, 1 or 2 pennies adjustment, and he'll put that in. But that doesn't mean that much, you know. That doesn't mean that's where the market is pricing. Doesn't even mean that's what the market is looking at. You know, there could be looking at different metrics unique to that company that are even more material and more important. So it's something you have to really keep in mind, that the earnings per share themselves may not even be the most important factor for a given company. You know, like Amazon, you could take a look at, you know, Amazon, a lot of theirs is based on revenue, right? Are they growing their revenue, not their earnings per share? And where are they growing their revenue, right? Are they growing their revenue in their retail space, or are they doing it in their cloud? All this stuff becomes more important that people are following. And how do you have a good forecasting model to look out into the future, you know, because you're going only from quarter to quarter right now. So I guess the answer is yes, they might be beating and the stock goes down, or they might be missing. You know, you could miss, but your forecast or your outlook going forward is optimistic, the stock could go up. This happens a lot of times across the board in many stocks.
Very good, D. We do have a bunch of questions, only a little time left.
Okay.
We will try to get to the questions tomorrow, but Doug asked one that you may be able to get to before the opening bell. Doug asked, can you have D comment on options, time and sales, intermarket sweep conditions? I guess what the intermarket sweep condition on the time and sales means.
Yeah, so let me see if I can find one. When you enter in an order, let me see if I could go to one right now and show you guys. So when you enter in an order in the options market, the order itself, it goes through these Reg NMS compliance. Okay, Reg NMS compliance says that if you could enter in a marketable order, but your broker is required to get you the best available price first. Okay, that's what. So here's an intermarket sweep that, and thank you guys for the questions. I really like some of them I can't answer, like I said, because they're not directly related to what we're displaying. But let's say you're entering an order and your broker, by regulation, has to get you the best available or displayed price. So like that's the rules. So here's a bid and offer 303, 306, right? But let's say you want to buy 100 contracts. 100, you have an order and you're like, listen, I have 100 contracts that I want to buy. So if I enter in 100 contracts, then my broker is like, okay, well, the best offer is 306, and that is displayed on the CBOE exchange, right? So 306, there's an offer of 306 on the CBOE exchange. So that means I have to route it to the CBOE first, right? Because maybe Philadelphia Exchange has it at the next offer is $3.07, okay? And maybe then the American Stock Exchange also has it at $3.07. So CBOE is showing the best price, 306, right? The best offer. But you have 100 contracts to buy, and you're going to get routed to CBOE first, but let's say CBOE has only one contract available, right? You're trying to buy 100, but they only have one contract available. So what happens is your broker first tries to buy it at CBOE. They get the one contract, there's not more available. So the next available is 307. Then they have to go to the Philadelphia Stock Exchange to get a 307. Let's say there's only 50 on Philadelphia Stock Exchange. So far you bought 51. You bought one at 306, you bought 50 at 307. You have 49 left. Now you got to go to the American Stock Exchange to get your other 49 at 307. Well, while this is happening, the stock could move, right? So while this is happening, you're trying to get to 306, then you're trying to get to 307, then you're trying to get to 307. The stock could move. And by the time you got to 306, everybody went to 308, 309, 310. So now you got to pay a higher price, right? Just because you had to go to the 306 first, you got that one contract, but who cares if you got one contract at 306 when the other 99, now you have to buy at 310 when you could have gotten them at 307, right? Because the market moved while you're doing this. So the intermarket sweep order was created as a special order to say, I don't care about these Reg NMS rules. All right, they were created. They're not working out for me. So I want to get my 100. I just want to get my 100 contracts, filled as immediately on the displayed prices. So go simultaneously to go get them 306, 307, 307. So I get them simultaneously. I don't even care what order. I could get 307 first and then go to the 306, but I want to get my contracts. I don't want to sit there and wait for, because of these Reg NMS rules, because I'm going to pay higher anyway. It doesn't work for those Reg NMS rules, do not work for me to get the best price, because while you're doing that, the market's going to move and I'm going to be worse off. So I'm going to enter in an intermarket sweep, and I see the prices on the Philly, on the Amex, and on the SIBO go simultaneously and get everything there, irrelevant if one is higher than the other. Okay, because there's not enough contracts available for me to get my fill just from this one exchange. So when you enter an intermarket sweep order, that's what's going to happen. It's going to go, and it's going to go, and you see here, there are two, went to NASDAQ, OMX, BX. So what it did was it went to simultaneously, it says, okay, if the broker doesn't see that if I'm trying to buy 100 contracts and the broker doesn't see that there's 100 contracts available at the lowest price, he's going to go there simultaneously to another exchange, to get the rest of it. Because if you're doing it one at a time, that takes more time than going in simultaneously. And if you're doing it one at a time, you risk that the market can start moving against you. So that's why the intermarket sweep order exists, to try to get and you could use your broker, you could just say, do an intermarket sweep. Okay. So if you do an intermarket sweep, you could end up paying a higher price than displayed. That's because you're going to the top of book of different exchanges.
Awesome explanation, D. Another great show, and great job by the Chameleon community bringing all these questions. There's never a question that isn't a good one, and we really appreciate them. Please send that information along to Dimitri and I, support at MarketChameleon.com, that we mentioned today. Any questions you have, we have a few questions left. I'll email those to you as well, D, but also email us at the mentioned email with any questions. Great job, my friend.
All right. Thanks everyone for joining. Thank you so much for the questions. They're all really good questions. Hope you guys have a great trading day, and hope